When the market has moved from a 50-day high to an 8-day low in just 2 days, it has commonly been followed by a bounce. Great little stat there that I picked up. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:43 a.m. Central Time, and I'm recording this in preparation for the market day, March the 5th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in. Let's see what happened in the overnight. Obviously, just in the last few minutes, we've had the ECB announcement, as well as Draghi has started his press conference. So these numbers may have already changed a little bit, but bottom line, it's a relative view on the markets and the overnights, and in the 4 broad market indices, they're all essentially scratch at the time that I took this. So nothing of significant movement. We have crude oil's up a little bit, about 35 cents, about 0.68%. You had the euro down a little bit, which certainly Draghi and the European markets want. And then you have our 30-year bond. Let's see, it's down a little bit, and gold just barely up. So really pretty quiet in the overnight. Perhaps crude oil making the most significant move with its up 0.68%. In terms of overseas exchanges, you have China down about 1%, Hong Kong also down about 1%, but Europe did not participate in that negativity. You do have Germany up 0.68 and the United Kingdom up 0.40. In terms of macroeconomic reports for today, you got unemployment claims, of course, on Thursday, non-farm productivity, labor cost yellow report. You do have an FOMC member speaking today, so about 10 o'clock Eastern, and then factory orders also during the trading day will be released. Natural gas storage will come out if you're into that market. So several kind of typical Thursday macroeconomic impact points to be concerned about. In terms of tomorrow, this should be the first Friday of the month, so we should have the big non-farm employment. So that'll be a primary mover. That's one of the 4 big reports. You also have trade balance. And let's see if there's anything else. That's the main thing. Obviously, the big monthly employment and unemployment rate, that will be the point in which everybody will be looking for tomorrow. In terms of our volatility conditions, still very, very low. Short-term VIX is at a 12.28 on the S&P. You see the historical IV percentiles all very low, certainly in the bottom third, and really almost in the bottom quarter. In terms of standard deviation moves, very, very quiet, really. The only one that's anywhere close to normal is the Dow, but you've only had 1 standard deviation trading day in 2 of the 4 markets, the S&P and the Russell. So very, very calm days, and if I remember the numbers right, these both were just barely over a 1 standard deviation move. So been very, very compressed, very quiet in terms of the volatility in recent trading days. In terms of our regular daily report, still phase 3. We're looking for higher highs, higher lows. Also still with our portfolio investor posture, IBD status is confirmed uptrend. Our GMI index is also a 6 out of 6, so no changes there. Active trader market posture, very bullish. Our position sizing, as you would expect with these kind of postures, investor position sizing alongside portfolio exposure can be up to 100%, and from an active trader posture based on volatility also up to 100%. So both opinions are leading you to think that you should be able to take normal trade position sizes. Market timing opinion, as I said from the quote at the beginning of this video, when you have had a 50-day high followed by an 8-day low within just a 2 trading day period, that's commonly followed by a bounce. So we are slightly bullish for today and for the 3-day outlook, and then also slightly bullish for the 2-week outlook. Market postures across all 4 indices are still very bullish, and you see while they're no longer pegging the 99 and the upper limits, they're still all well over 80 and don't seem to be ready to flip over into a bearish status anytime terribly soon. From a hedge warning status, we are threshold level 0, so perfectly normal conditions. No untoward risk factors seem to be present in the market at this point. Volatility-based metrics, nothing really to flag. We will maybe mention that this S&P, we did have a distribution day there in the S&P. This has now risen to count back up to 4, with 2 on the NASDAQ. If that goes to 5, that will certainly be a warning status. It does seem like the statement for 2015 so far, and really to be fair, goes back to October. From October to the present time, we seem to be dealing with an increase in volatility, and perhaps that's going to be the story of 2015, while yet still, very bullish in our overall market stance. From trend base, obviously still very bullish. Nothing really to point to from our E-mini chart indicators. Intermarket risk aversion indicators are all pointed to risk on. You could say that many of these are in a sideways consolidation pattern, but there's really nothing to call these as flipping to risk off. Option income strategies, absolutely acceptable. VIX is within our acceptable window to initiate option income strategies, and indeed I know I've got a couple, 3 of those on myself. Covered calls, slightly bullish. We seem to, while we are slightly bullish, we still certainly seem to have some channeling going on right now. We were in that 3-month long range, and we finally broke out of that, and then now we seem to have, after setting some new highs, have started a new consolidation pattern. So an equal distribution between in the money and out of the money strikes is the current opinion. And then put selling, also slightly bullish, so acceptable to sell puts against the core portfolio baskets that you are willing to own. And other reports that have been updated for today, we have sector market posture. Notice that with this recent volatility, we have become a lot less green. There's a lot more neutral here, especially in the short and intermediate terms. You notice again, utilities and energy continue to be the 2 sectors that are most at stress, and if you've been trying to pick a bottom in those 2 sectors, you're going to continue to probably have some troubles with follow through on your setups. On the flip side, healthcare, consumer discretionary, very consistently have been some of the best performers. So we're starting to see this, what we thought might have been some sector rotation, seems to be sorting back out to the prior trends, with healthcare and consumer discretionary being some of the most dependable and consistent places to be invested, whereas some of the higher beta areas continue to be on again, off again, very, very difficult to find consistency. The difference, of course, is utilities. Utilities, which was 2014's hero, been absolutely crushed. We thought we might be finding some support there. Perhaps that will still prove true, but certainly utilities continues to find difficulty in establishing a bottom. Sector percent change yesterday, obviously a lot of damage. The only thing that was up was healthcare, and at the other end you see telecommunications was down 1.19%. So interesting. You have a up in terms of market posture, but obviously while short-term market posture can be up, it can still be pulling down within how strong that was. From an industry group setting, our top 5 industry groups: retail, railroads, internet, healthcare, and transportation. It's interesting, transportation is in that group. Biotech continues to kind of float on the peripheral of our top 5. That one has bounced into the window there of our focus. So keep that in mind as you look for your screens and your watch list. It's always best to be in the top industry groups within the top performing sectors, and you'll have the most tailwind behind your trades. As always, we greatly appreciate you liking us in YouTube or your other social media platforms that you may be following us on. And we should be where you are: Twitter, Facebook, StockTwits, Scootify, and YouTube. And then, of course, any questions, comments, support at falconglobaltraders.com is our contact. And then, of course, more information available about any of our products, including our daily price guides, as well as our 3 live trading rooms, at falconglobaltraders.com. Disclaimers as always: hit the pause button if you need more time to read this. And we greatly appreciate you each and every day in the Falcon Global trading community. We'll look forward to seeing you tomorrow, our next trading day. Thank you.